Buddy, it's Brian Shannon here from AlphaTrends.net. Today is Friday, the 9th of June, 2017, and the market's finished with a little bit of a loss here today as we did, like I said, just lose a little bit of ground. The S&P 500 down slightly for the week. It was down a quarter of a percentage point, and the NASDAQ, though, is where the selling came in today, down 2.5% on the day, bringing the week negative as well. But the Russell 2000 outperformed. The biotechs were a little bit weak here. That was kind of a surprise. And semiconductors were the weakest group, actually, besides oil. So let's take a look at the market because, financials were up 3.6%. You can't call it a complete negative here. The daily chart of the S&P 500 is still clearly in an uptrend. We saw that it broke to a new high this morning and then failed, but we didn't really do any actual damage in the S&P 500. We briefly got through this level of support at 243 and then came back up through it at the end of the day. We are below the daily volume weighted average price and we are below a declining 5-day moving average, and that tells us that going into next week we want to be a little bit more cautious about this market, and we will be looking for unless we can get back above 244.50ish, then we want to remain cautious in regards to the S&P 500. The next potential level of support that I think is going to be significant would be down near 241, 241 and a quarter. That is where we see the volume weighted average price from the May low, and that's also where we have that, well, the 20-day moving average is below that actually. But, the market is still, it broke resistance over here. It's still above that level. That's going to be the key level to measure against. If we break below there and hold below there, then maybe we see another test of the 50-day moving average. But overall, we're still in a bull market in the NASDAQ as well. One day pullback doesn't make a bearish trend. In fact, it's most likely that we will see some recovery in here. Look at the last few big candles lower. They have led to nothing but further upside and further buying. So we clear the decks for a little while. Right now it's too early to buy in my opinion, although if you look at where we found the buyers today, that was right at the volume weighted average price from the April low. Earlier in the day I had referenced as well to keep an eye on the volume weighted average price from this level, which it just sliced right through. So I think that heading into next week, we've got to be a little bit cautious on the NASDAQ overall. It broke its first level of support right here. In Thursday night's video to subscribers, I noted that we had a ton of really bullish looking scenarios and stops that we were long, and I said often when it gets that skewed to one side, there was no evidence that selling was coming, but we have to be cautious. And sometimes it seems counterintuitive that you have so many bullish setups and positions that you're in, that as long as you have stops, which we got stopped out of a lot of winning positions today, but the fact is they were winners, and you don't have to ride it down this far. It depends on what your time frame is, of course. If you're a longer term investor, then there's nothing to worry about that I can see here. We're in a long term uptrend, and a little bit of a pullback after just hitting an all-time high in the morning isn't a horrible thing. But the other thing is we did see from a failed breakout came a fast move lower. Now what we need to do is be patient, let it settle down, and let the market identify for us where the next low risk, high probability trade scenarios get set up. The Russell 2000 this week did break to a new all-time high, and it closed at a new closing high today after missing that benchmark yesterday. But it's an all-time closing high in the Russell 2000. So this is the group people have been concerned about. We lost some ground in the NASDAQ, but the Russell 2000 for the week was up 1.25%, and this is the highest it's been all year, up 5%. Maybe this continues to outperform. Maybe it's a flash in the pan. If you have stops in place, that's not really relevant. I mentioned that getting above this level is where we're long at Alpha Trends, and we've taken a little bit off. But I think that you know where your stops are for the time frame you're in, and there's no reason not to give the benefit of the doubt to the buyers in the Russell 2000. If next week we break down below probably 138.50ish, then I think you want to be a little bit more concerned about this rally, and that this might in fact be a failed breakout. But until we get down to and through 138.50, I'm still looking at this market as innocent till proven guilty, breaking the high end of a range that it's been involved in since, well, for 7 months now. The semiconductors got their first bigger pullback in a while, and if we look at similar pullbacks to this one, I can't tell the difference, not from where I am right now, between these prior sell-offs either. It's a pullback. It was a percentage movement of 3.78%. We came down and held the closing on closing basis, the rising 20-day moving average. When we look at let's look at a 65-minute chart, and we'll say from this low right in here in April, that we're still above that volume weighted average price. So perhaps it can continue down towards 83 before we see the buyers really gain back that control. So keep an eye on 83 next week, and look at this as, if we rally up, it's likely to find resistance near that declining 5-day moving average. A lot of people want to call this a top or the top, but the fact is you don't know till well after the fact. The primary trend is still higher. People have been calling tops in the semiconductors for well over a year, and no one's been right, except for maybe a couple people who might have said that was the top this morning. But again, they've called it 25 times. 1 in 25 is not a track record. We go with trend, we go with probabilities, we go with low risk, high probability setups. And the semiconductors right now, I don't see a low risk, high probability setup, so just leave it alone, let it settle down. The biotech's a little bit disappointing that they had broken this resistance and then pulled back into here. I'm still bullish from a longer term perspective, or trying to become bullish is what I should say, because we broke the volume weighted average price year to date and then tested the volume weighted average price from the pre-election lows, and these biotechs have been struggling to turn higher for a while. I kind of thought we were doing it, but I am now out of my bullish IBB and looking for re-entry. To me, it was disappointing that it failed below this break level and also took out yesterday afternoon's lows. So I'm a little more neutral on the biotechs from the intermediate term standpoint, but still am looking for the possibility that they can right themselves or stay within this bigger range, and then possibly give us further upside opportunities. TLT, I had mentioned that I thought a stop should go underneath this low. I'd been mentioning it as a long candidate over once it got above that volume weighted average price. I'm not a big fan of bonds. I don't talk about them a lot, but with a declining 200-day moving average, it's most likely that this rally has exhausted itself. So I'd say if you're a bond person, move to the sidelines. The XLF, the financials, this group here, we spoke about that head and shoulders pattern, and I was saying that with a rising 200-day moving average, that I thought it was more likely to become a trap. I did not participate in it, but we never broke below that neckline, and we broke back above that 50-day moving average, and now the buyers are back in control of the financials. This will be a group that will be good to keep an eye on. Right now, it's above a rising 5-day moving average. I would look at pullbacks in here as innocent till proven guilty, most likely to be bought as long as they remain above a rising 5-day moving average. And some of the stocks that we were involved in, we got involved in Caesars over here. We took a little bit off initially there, and then we're stopped out of balance today with a $1.05 gain, which is a nice percentage move, of course. XPO, we got involved over here. We took a third off. We got stopped out of a third there. Another stop here, so for about 4.5 points. C-Trip, we were stopped out of today. This was a 20-cent loss in that one. MLCO, we got stopped out of this one profitably. Stratasys, we were stopped out of profitably before all this decline. So it's risk management. We're also long Bloomin' Brands from right here, and we'll be raising our stop once again. We've taken a third off, but it comes down always to risk management, and that's exactly what I focus on each and every day in individual stocks for subscribers to alphatrends.net.